Well, the Victoria Day long weekend can also bring fluctuating gas prices with it. And for more on how much it's going to cost drivers to fill up over the next few days, we're joined live now by Canadians for Affordable Energy President Dan McTeague. Good morning and nice to see you, Dan. Thank you for joining us.
Great to be here, Lena. And for the first time, I have good news, not bad news, when it comes to gas prices.
Okay, I'm going to take that. Take it away, Dan. What do you got for us?
Not much in the way of any major changes. We've already seen some increases today. Went up a penny, $1.64.9. Tomorrow, another penny, $1.65.9. Maybe on Sunday, we might see another 1 cent increase. But these are really incremental. They're really not a big deal. We were $1.66 last week. We're $1.66 by the end of the week. It looks like we're going to avoid that, that usual idea that gas prices go up on long weekends. What's critical to understand is that we don't make gas prices in Canada. In fact, they're determined by the United States. And because their Memorial Day long weekend doesn't happen until next week, the official launch of summer demand, we're not likely to see any major disruptions in terms of price until at least Thursday or Friday of next week, at which point, if it's anything like last year or the past 30 years I've been doing this, you're looking at probably about a 7 cent increase. We will be back to $1.70 to $1.72, likely by a week Sunday.
Okay, I want to pick up on that. Explain why you're watching for Memorial Day weekend in the U.S. and how that could impact markets. How does that work?
Yeah, I mean, the U.S. is expected, according to American AAA, to have the largest weekend of demand in their 24 years of tracking this. They suggest that people taking back to the roads, relatively speaking, prices there have calmed down, and it's likely to lead to an increase, a surge in demand. And that demand has to be met by supply, which is adequate, but certainly not where it should be for this time of year. And we saw a bit of a head fake here, Lena, in the past couple of weeks where when you and I last spoke, announcing the 14-cent increase, which was the summer introduction of gasoline, summer variant of gas. We're down 16 cents a liter since then. That's because markets are very nervous. They're not focusing on supply and demand. They're focusing on interest rates, which isn't a very wise thing to do. It's not a proper metric in which to consider economics and fundamentals 101. So the United States matters. Their demand picture is 10 times greater than Canada. And of course, what happens there really has an impact on the price that we are going to pay, usually 2 to 3 days after those markets settle. I would think that by the time Wednesday and Thursday rolls around, we're to make those calls to you to let you know, give the 2-day heads up that you can get here usually when we see big price spikes.
Yeah, we always appreciate that heads up from you, Dan. In terms of the stability we're seeing here at home, what's driving this improvement in gas prices in our neck of the woods?
Well, I think it has a lot to, first of all, put in perspective, this time last year, you were $1.53.9, so you were 10 or 11 cents a liter cheaper. A couple of factors. We didn't have an increase of 4 cents on the carbon tax. We had a stronger Canadian dollar last year that shielded us about 2 cents a liter. And the rest, of course, is just the fact that we have seen oil move up back then from $73, $74 a barrel up to about $79 a barrel. So that's good for another 4 cents a liter. All in all, the fact that we dropped so dramatically from April 18th right up until earlier this week had a lot to do with the sense that without the U.S. Fed, reducing interest rates, this would somehow damage demand, or that this would be seen as an economic drag that would ensure that more people were not working, ensure that the overall robustness of the U.S. economy would slow down. That, of course, hasn't happened by any metric or measure. And so what we're looking at here is two parallel universes in which you have saying, it's not worth investing and it's not worth it. And consumers obviously responding very much and very pleasingly to the idea that, hey, if prices are going to remain low, relatively speaking, to where they were a few weeks ago, well, we're going to get back in our vehicles. And it looks like this is going to be a humdinger next week in the United States, where demand is greater than Canada's.
Okay, I'm sure drivers will really appreciate this little bit of reprieve this long weekend. Canadians for Affordable Energy President Dan McTeague, thanks so much. Appreciate this.
Always a pleasure. Have a great weekend, Lena.